Thank you everyone for joining us for this episode of the Money One On podcast. I'm joined by Michael O'Reilly today. Michael's got an extensive background in customer-owned banking and has worked in the sector for many years in senior marketing roles. Great to be with you, Michael. Thanks for joining us.
Thanks for having me, Andrew.
Wonderful. So obviously the mutual banking landscape is one that's changing a lot. As you know, you've done a lot of research for Money 101, which has been incorporated into our new discussion paper on supporting members' financial well-being and talking about the business case for financial education and customer-owned banking. What's happening in the mutual banking sector? We've seen obviously rapid consolidation, mergers activity in that sector, as well as rising compliance, cybersecurity, and technology costs, and a shift towards fewer but larger mutuals. So why do you think the sector is changing so quickly, and are these mergers potentially now inevitable for those smaller mutuals getting swallowed up by the bigger ones?
Thanks, Andrew. Great question. Look, a few factors will contribute to continued merger activity, in my view. There's cost. Fixed costs of operation continue to rise, specifically things like technology, infrastructure, compliance, and building cyber resilience into firms. So that comes at a cost. And those fixed costs, they're disproportionate to smaller organisations. So, you've got to build a competitive mobile app, you've got to deploy and utilise AI in your systems and at scale, and you've got to maintain a cyber secure environment. So that all requires capital. And it's costly. So that is one factor that will continue to sort of underpin that activity.
In terms of then so mutual banks have sort of a key selling point, I guess, if you like, would be the sort of personalization. A lot of them obviously have started off, many of them decades ago as organizations for the benefit of a particular cohort. You see with whether it's police, emergency services, defense. The ability then to stay personal as they grow larger and potentially merge and consolidate. There's an obvious tension there, isn't there, between those two aspects? Is it at a certain point, does it become almost the bank becomes too large to have that close relationship with the member?
Well, it definitely becomes harder as you grow. The more people there are, it's harder to serve them and give them that personal level. But I think it just changes the conversation a little bit. It's just a more nuanced approach. So it's not impossible. Being personal just needs to be reimagined for a digital context, right? So while the bank manager may no longer know your name, you can use data and applications to anticipate a member need, to nudge member response, etc. And rather than just simply responding to requests, you can have a proactive stance in how you deal with your data and how that translates into the member experience and that personalisation. So I think it just changes the game a little bit. You're still able to make members feel valued, and with digital, even if the digital interaction is completely digital, So I think it changes a little bit, but makes it a little bit harder at the same time.
In terms then of mutual banks still having that important place in the market, we know there's high levels of trust and sort of community connection with those institutions. That member-owned versus shareholder-owned mindset that's sitting there is an important aspect of that, and almost the ability to meet regional needs, meet niche communities, like we said, with police, defense, teacher, bonded banks. Is that really what makes customer-owned banks different then, that they don't have those shareholders that are beholden to?
Yeah, I think it's a fundamental difference. It's a fundamental structural difference, and no external shareholders, means no conflict between what's good for the institution or the bank and what's good for the member. And, the real benefit there is every dollar of profit goes back into the business, stays in the business, or it goes back to members through better rates, fairer fees, and reinvestment into services. So it is a fundamental difference upon which, mutual banks are built. And I think it's an important one. I think it still makes them different. It's a really interesting fact. So there's 8 mutual banks that are certified B Corps in Australia. So there's, some of these include Teachers, Bank Vic, Beyond Bank, Bank Australia, People First Bank, Australian Mutual. So if I've forgotten anyone, please forgive me if you're listening to this, but there's 8, and that's a really good number. And that number's interesting because there's only 60 banks worldwide that are certified B Corp. So that's about 13% of the global total is B Corps, are Australian banks. Interestingly, there's no shareholder bank that's a B Corp certified, so within the Big Four regional or otherwise. So it's a really interesting stat that there's a real concentration of B Corp certified banks in Australia. And I think the reason why that is that there's that purpose-led sort of identity to banks in the sector, to mutual banks, and which makes them just a natural fit and a natural alignment with that B Corp ethos. So no external shareholders, profits returned to members, democratically governed, roots in local communities, whether it's geographic or bond, they're all things that align very naturally into that B Corp certification process. So it's not really something that's a transformation for the mutual banks. It's just rather verification or validation of what they actually are. So it also answers a bit of a marketing problem, I think, because mutuality can be a bit of an abstract, concept. When you first hear about it, you sort of go, oh, members, the shareholders, and all that sort of stuff. So it actually sort of crystallizes that a little bit through this external sort of certification. It makes it a bit more tangible for people to recognise, and the fact that it's independently audited as well makes it quite a good thing and makes it an interesting point for people to look at and refer to.
In terms then of how do you think the expectations are evolving for members as they go through? What are they looking for, in your opinion?
Yeah, well, I think first and foremost, there's a real expectation around strong sort of digital first experience, which is key, but they also want the personalisation as well, and they also want to be able to talk to someone as well. But so you need a good banking app, and if that isn't up to scratch, then customers will walk and they'll tell people about it as well. That it's not a good banking experience. So it's that seamless digital first experience that's something that's important. And you see many sort of leading banks and fintechs are sort of pushing into that space quite aggressively as well. And that's things like end-to-end digitization, loan origination, onboarding of members or customers to servicing and ongoing support. So that's a key expectation. Fraud protection is also becoming a really, really important part of it. And how banks respond to fraud is a reason I've read about that, is really will make people consider switching banks if there's not a great response to fraud, or they feel like the bank's not in there helping them out fight fraud as well. So for fraud and scams. So, there are a couple of things that's the evolution of, the experience. I think they're key, front and center.
From a Money 101 perspective, so we obviously are digital financial education providers and have incorporated AI into some of our offerings as well. And I guess that leads into my next question about what you think the role will be for both AI and digital education going forward for mutual banks.
Yeah, that's it. I think it's there. You'll see it more and more. Its prominence and it's not a matter of emergence anymore. It's here and it's already happening. So AI has a great role to play. It will give members and staff, tools to engage, effectively with the bank or the systems. It will improve the member experience, and it will also preserve, if banks can preserve that personal touch, mutual banks that have that personal touch can preserve that in conjunction, with AI and the use of AI, then I think that's a really powerful part to play in the sector. So it's a game changer for threat detection, for example. It's how banks protect you, how they can look after, manage the vulnerabilities that exist, intelligence gathering and personalization. So, AI can start to deliver for people that level of personalization that they crave. And it can also, replace that, that we were talking about earlier, that face to face, if that sort of is harder to deliver, you can still have that same sense of feeling if, the personalization and the AI tools that are utilized are there to help and inform. So digital education is really important. And I think that's the level of financial literacy in Australia is low, and it needs to improve. And if you can help your members or your customers understand budgeting, how to fight fraud, scams, saving, investing, it's a great thing. So banks have an active part to play in that, and online education is part of that, in how that can help. So, if your members understand, if your customers understand, they ultimately make better decisions, build more resilient lives, come stronger financially, and more engaged members of the community. So it has these flow-on effects, I think you can see, and really, really, really good to understand. So I think it's a big part to play.
Absolutely, and I think it's a win-win for the bank really if they have more informed, more financially capable members too, that are probably then better prepared to engage on a sound basis with whatever products they might be providing. I think that's really important. And looking ahead, then in 5 years' time, we've talked about how obviously when you started out in the industry there were a larger number of banks and that number shrunk. How do you see that looking in, say, 5 years? Take out your crystal ball.
Yeah, I know. It's sort of a thing. I won't give you an actual number because it'll be quite hard to, but I think it's definitely going to continue. That trend is there, and it's been borne out over decades. I definitely think there'll be fewer mutual banks, but they'll be bigger and they'll be more capable, and they'll bring the ability to scale and deliver that necessary level of investment. So that's a good thing. So I think there'll be fewer, but there'll be more. So they'll be able to make those big investments in technology, compliance, and focusing the products and services. So there'll be less, but potentially half. That seems to be the rule of thumb as it goes down. Through a decade, it seems to roughly half in numbers. So you'll see those bigger ones emerging, and there's certainly a lot of activity out there now that is indicating that to be true.
And in terms then of, obviously without naming names, but who do you see is going to thrive then in that new space going forward? Well, who's best positioned to do that in future?
Well, I think like anything, if you'll thrive if you continue to deliver value, relative differentiation to your members. If you've got something that is valued by them, you will thrive. So I can't, it's hard to speculate, but there's a few characteristics that will probably apply. I think one thing that I'd love to see is that firstly, mutuals cannot and just not try just to mimic larger banks. I think that's not the right play. We have to double down on what we can offer, and that's something that the banks can't replicate. So whether that be, there's a few areas, whether that be knowledge or understanding of a particular bank or a particular bond, like teachers, defence, police, nurses, or whether that's a certain positioning that some of the B Corps have adopted in relation to the environment and their general ESG provisions, or whether that be to regional banking. I think they're some of the cues and hints that we'll talk about who will thrive in the ongoing future. So the mutual banks that will win, I think, are the ones that maintain that balance, so they'll double down on what they do best. They will also close the digital gap and not lose members on experience. So, if they're enhancing their capabilities digitally, they've also got that personalization level delivered both face to face and through utilization of technology. That's going to be hard to replicate, for some of the bigger banks. So you still get that intimacy of a local bank, but at scale, and the convenience of a digital one. So they're the sort of characteristics or environment, I think, in which I think banks will thrive into the future. So, and with this consolidation, I think the final point I'll make there, when it consolidates like that, you bring two entities together. So the ones that will really do it well, the ones that really bed down that culture, and maintain that culture and enhance that culture. So I think if they're doing that right as well, that will be a big basis for moving forward as well. In many ways, we are customer owned banking is one of Australia's best kept secrets in many ways. So that's the challenge and the opportunity there for mutual banks and the sector to sort of move and to elevate themselves. Serving regional Australia and local banking communities is an opportunity, and one where the major banks are less inclined to play. So I think that's an opportunity for the sector as well. Values-based banking, it's inherent in every mutual and customer-owned bank out there. But people, are actively seeking institutions like that reflect their values on things like climate, community, and fairness. So I think there's some of the opportunities that exist there. So I'm quite optimistic that there's certainly a future for the sector.
Mm. And that would lead into my last question as we finish off here, in terms of, we've talked about some of the challenges and some of the opportunities, but it sounds like overall that you do have optimism for the sector. And if you could talk a little bit about where you see that going in terms of what are the positives that mutual banking can still provide.
Yeah, well, look, at its very core, it's people, right? So from the beginning, the sector has always been about people helping people, people bonding together, provide loans to get people ahead in terms when banks weren't extending credit to many people. So it's got that core essence to the movement, and that member centricity and focus on member benefit, I think, still remains, and it sort of just runs through the organisations regardless. And I think Australian public will always value and appreciate that sentiment. And so I think that's a thing that keeps me, buoyant about the industry and optimistic about the industry. The fact that, people that engage with mutual banks, they're happy, the really high levels of satisfaction and advocacy, as measured by, people like Roy Morgan and the Net Promoter Score. You see that the scores, those scores have always topped the tables in terms of, what people are happy about. So there's real daylight between the sector and other banks and financial institutions there. So I think that's a really good thing as well, that there is that sort of people want to like us, people use us like us. There's the people, so there's that essence to it. And then, another thing which is probably not mentioned as much, but there's a real, to my mind, and having been in the industry for some time, as a sector, the customer-owned banking sector has always innovated and done surprising things. There's a fun fact: first ATM in the form that we use today was installed by not one of the big banks, but 1977 by Queensland Teachers Credit Union in Fortitude Valley. So, that shows that sort of early innovation. More contemporary example, you'll see customer-owned banks among the first to adopt Apple Pay and Android Pay much earlier than the majority of the big four banks. First to market with the new payments platform and open banking in the mid 2010s. So you can see that really there's that willingness and that ability to pitch in and be that vanguard of digital adoption. And I don't see any reason why that mindset won't continue in the future. So I think there's a few little elements to make me feel optimistic, about the future, and there's some of them that I've just outlined there.
That's a really good positive note to end on. So thank you so much, Michael, for joining me today. Great to chat about mutual banking sector and where we think it's going. And thanks so much. So Money 101, obviously keen to support the sector, and that's part of the research that you've been doing for us, and we really appreciate that. And it's all been collated in this document that we have, Business Case for Financial Education and Customer Owned Banking. And we invite people to continue that discussion and give us your comments and feedback. And thanks so much.